Okay, we going now? Live now. Okay, there we are. Morning, everyone. Glad you could join me for which trade to make. Which stock to trade is the name of the program, but I'm going to give you three different trades: one a stock, one a currency, and one a cryptocurrency. And so here we go. JP Morgan, that's the stock that we're going to look to trade and set up a trade in preparation for 60 minutes from now when the US markets open. The Euro Aussie is a great southward trade going short the Euro and long the Aussie, although I'm going to say that you might do a better job setting up a trade long on the Australian dollar versus the US dollar. Then, last of all, I would say the Ethereum is the cryptocurrency to be trading this morning. So I want to walk through all three of those trades and explain to you my idea for why those are my best selections. Now, as I'm sure all of you know, I'm not a licensed financial advisor. This is not specific investment advice for your portfolio. This is my opinion and meant to help you do your own due diligence and take your own risk. So trade at your risk. But speaking of that, I want to kind of go through some of the picks, some of the recommendations that we've made over the past few weeks here in this program and sort of show you why setting up your risk properly is something that really can be worthwhile using the recommendations that this selections that I've made each week as examples. So I'll be covering that too. So let's start off with where I always like to start off in these Monday mornings, a comparison between the Aussie Yen and the Nasdaq. And so I'm going to share my screen here so we can get that going. Wait a second. Okay. And just if you wouldn't mind chat in and verify that you're looking at my screen. This is one with JP Morgan up right now. So we move over to the, yes, okay. Here we are with the Aussie Yen US or Nasdaq comparison. All right. So what we've got here is a 5-minute chart starting from where the week begins, and Aussie Yen heading up, kind of going sideways since Monday broke, but still, generally speaking, an upward trend from the weekend. The Nasdaq looks similar, and although it in more recent hours looked like there was a little more selling than the Aussie, it's still generally upward trending. Just the VWAP line, the purple line, is sloping higher. So that's all of that is good. So what do we take from this? In general, there's still people out there that want to buy, that want to invest, both domestically within the US and globally, is as tracked by the Aussie Yen. And what does that mean? Well, it probably means that we're not going to see heavy selling right out of the gate on this Monday morning. We could see buying or selling, who knows? But my guess is we're not going to see just a strong runaway buy. There'll be fluctuation like there always is. It's a Monday morning. There's not big news going on. So people aren't going to be freaked out about the markets. They're naturally going to expect markets to be on the rise. And so they'll probably pick their spots and find places to be a buyer. So we're more likely to see upward motion than downward motion. That's my read. So with that as the context, then let's look at a couple of or at the ideas that I mentioned. All right, so why JP Morgan? The biggest reason for why JP Morgan is that there are two industries right now, which are, or not industries, sectors, which are leading the others, and that is energy sector and financial sector. Well, we already did an idea on Chevron, CVX, which is one of the leading stocks in the financial sector or in the energy sector. And that trade worked out. In fact, that trade, there's still, more to it, but it does have earnings coming up. So buyer beware. You'll see why I say that if you don't already know. But earnings coming up with Chevron. There's also ExxonMobil, the other heavyweight in the energy sector, which if energy sector is going up, both those stocks are going up, right? Or if both those stocks are going up, the energy sector is going up. Both those two are kind of lagging behind energy on average over the past 3 months. So in general, if they're going to do well, they're going to catch up. But both of them have earnings coming up here in about a week or so. So I don't want to highlight them. The other sector was financial, and the leading stock there is JP Morgan. Well, JP Morgan's already had earnings. They did their big dip. Their earnings were good, but unlike the rest of the financial sector, when their earnings were good, people bought up the stocks. JP Morgan got sold down, which means that institutional investors had a lot of JP Morgan. They hoped the news would be good, and they hoped that they could sell off their JP Morgan shares, take profits, and find something else to rotate into. But when the news was good and they, earnings announcements were out and people sold down, it just meant that, hey, a new class, a new group of buyers were ready to come in and pick up those shares. And so they did. So post earnings, things look good. Earnings were good. Price action now looks good for JP Morgan. It is now sitting at an all-time high as of close Friday. So it makes for a really good trade opportunity. We'll come back and analyze exactly what the trade could be like a little bit later. But this is why I'm liking JPM. Strong sector, and it's already past earnings, so you can make a trade set up hitting a 52-week new high. You can make a trade setup that is not going to have a lot of risk to it. All right. Now then, let's look at the currency trade, Aussie Yen, why I'm interested in this one. First off, to explain, let me go to DXY, the dollar. You've got the US dollar having kind of topped out in its recent upward trend, made this dip, and you could say, hey, we're going to come back up. I mean, it's done it before, right? Which would mean you should be going short anything with the US dollar on the other side. But this time, I think that the inflation concerns and the coming into the fourth quarter, I'm just not confident that we're going to see dollar strength. Now, it might be, I think part of the dollar strength is that we've been expecting the Fed to taper. And because they're going to taper, they're not going to diffuse the dollar more, and therefore dollar should be a little more valuable and desirable, and therefore that's why people have been buying it up, because they've been expecting the Fed to stop spending so much money. Yeah. And that's like a gambling addict, him expecting him to really not play a lotto ticket or whatever. Take your pick of addiction analogies. Can the Fed really stop spending money, stop, purchasing assets, stop injecting money into the system? I don't know. I think it's a safer bet to say that no, they won't. That they won't taper as quickly. And they'll probably get to some tapering eventually, but they just won't do it as quickly as anybody thinks or hopes. If in fact you're a dollar investor and you want the US dollar to go up, so at some point we've been going up since June, and at some point I think people are going to say, "Oh, those Fed, they're never going to do anything," and then it's got to turn down. Is now that time? Well, I don't know. I don't know the future like anybody else. I don't know, but I think it's a very strong possibility that yes, now is the time. Why? Well, because tapering was supposed to happen before the end of the year. And we're almost to the end of October. What's the end of the year? We've got 2 months left. When's that tapering going to come, right? That if it doesn't come, then I think you're going to see people recognize the dollar is, there's not reason for it to be strong. So let's jump back then. What does that mean if the US dollar is not going to upward or trend higher? Then what would we see? Well, I think we would see other currencies go strong against it. And if the dollar weakens, that means commodity prices, well, let me go do commodity prices, will strengthen. Here's DBC. It's an ETF that tracks the prices of commodities, mostly oil, but all commodities. And what's it doing? It's going up. Inflation, right? That's what everybody's talking about. And they're still talking about it. Oh, inflation is going to be transitory, says the Fed. Everybody says, yeah, transitory. Okay, transitory. It's not transitory. Every producer's price index, consumer price index, every measure of price increases over the past month that has come out has been higher than expected. And now you've got people saying, hey, we're going to have higher than expected inflation for a while, right? So there's that talk. And so what does that mean? If inflation is going to increase on the US dollar priced goods, then that means commodity prices are going to go up. And if commodity prices are going to go up, Australian dollar is going to go up because it's a commodity currency. The other one, Canadian dollar. So you've got USD, CAD, the US CAD. You would expect to see this thing going down, and that's what we see. It's going down, and the Aussie's going up. Both of these are behaving like the commodity currencies they are. Now, we saw the US dollar compared to itself, that it's kind of still upward trending. Here's the US dollar compared to the Canadian. And you see this price action going up, 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 and then break. We haven't seen the US dollar break its trend yet. But compared to the Canadian, it already did. And so I kind of feel like it's, we're at that time. We're at the time where the US dollar's upward trend will weaken, which means commodity currencies are likely to strengthen. Last week, I gave you this idea, Euro Aussie, and it's still a great idea. So why didn't I just put it on and say, off we go, more shorts on Euro Aussie? Could, but let me get specifically into why I like buying the Aussie against the US dollar compared to selling the euro against the Aussie dollar. So I'm gonna just zoom in a little bit here. Actually, you know what? Let's have a look at the 4-hour chart. So on Friday, the Euro Aussie looked like it might be ready to bottom and strengthen. So you see how on the 4-hour chart we get these moves where we're trending down and we get a little bit of buying, and then we just start going lower. A little bit, each time we do these green candles, we just sell down. Here it looks like, oh, we got above the moving average. No, right? This one, oh, we got above the moving average. 1, 2, 3, 4, 5 candles. No. 1, 2, 3 candles. Boom. No. But then here, over the weekend, we got, or right before the weekend closed, we got this, couple of, or a little more than 24 hours worth of what looked like the strongest buying yet. And now, since the new week has opened, we're just wiping that out. Okay, so we're ready to continue going lower, quite possibly. The problem is, and it isn't so much a problem as it is just what I'm going to talk about here are the nuances of improving your risk and reward potentials. Okay, so it's not like the direction. The thing that makes a good trade isn't just, oh, I can pick the direction easily. Direction, man, you almost never get that right. I sit here and I talk about all my ideas, and how often am I right about directions? If you're keeping track, tell me. I don't know how often I'm right. I like to think I'm right a little bit more often than I'm wrong in terms of directions. So we're talking about maybe 60% of the time if I'm doing a great job at being right. what I'm more interested in is giving you an idea that you can take that is, has got a little bit of edge to it, maybe the 60% right, 50, 60%, 55, 60% right ideas for direction, but even better, has a better payout potential compared to its risk. For those of you that have taken my classes that I've taught in the past, I like to give what I call the way of the falcon type trade ideas. That is, they're going to be risk 1-to-1. I just want to be right a little more often. However, if you take these ideas and then you apply a way of the jaguar, risk 1 to make 2, or the way of the pack dog, risk 2 to make 1, either way, you're going to get a slight edge to them, and you can make a trade that fits with what you're trying to do. When I gave the idea of the Aussie Euro back up here, I had said, if you recall, we were talking about it while it was down here. I said, I think it could go down, but you got to wait for it to go up a bit so that you can get into this area. And we specifically said breaking this high, right? It didn't do that. So trading anywhere in there, you were able to get a trade where there was 50 pips, or 40 pips of risk. Set your stop loss 40 pips higher, and that should cover it, which it did. If you did it down here, boy, you got right to the edge of that, but it still gave you enough room for that 40 pip risk, and then it continued the trend down with 150 pips move. So I was hoping for 100, so risk 40 to make 100 on a 50-50 opportunity, right? That's what you look for. You like that payout when you've got what looks like a 50-50, but a bigger payout than potential risk, and you want to take those trades all the time. All right, so here I am on the Aussie Euro. We've broken this low, but if I were to get in this, where would I have to set the stop? The answer is I'd have to set it clear up here. And Euro Aussie is 154.9 right now, and I'd have to set the stop up there 156.05. Well, that's more than 100 pips. Hey, it's all just decimal points. If you thought there was a 200, 300, whatever pip move on the Aussie Yen, or on the Euro Aussie, going to the downside, what do you care if you're risking 100 pips versus 10 versus 20 versus 50? If the payout is bigger, then it's a great trade. So my problem with the Euro Aussie setup is I look at this trend. It's been going pretty good, pretty strong, right? And that's what I love about the Euro Aussie, and that's why I like to watch that pair, because once it gets trending, it really tends to trend. But it's been trending a while, and so I want to find tight setups so that if the trend continues, the payoff remains big. Here, I don't feel like that's the case. I feel like we got 100, more than 100. You got at least 110 pips to get back to old resistance. And then how much more move do you got to the downside? We already went 100 down. This move here was only 150, right? We would have to go down 200 to 300 with very little retracement in order for that to be a comfortable trade coming back. I just don't think that's going to be the case. I think there's going to be a lot of back and forth. If it goes down, maybe it slips down another 100, maybe 50, and then starts having some, choppiness. But it's just not a clean trade setup. So if I was doing this show, 8 hours ago, and the Euro Aussie was here, and I'd say, hey, look, if we break, take that 40 pip risk and watch for that would be the great trade. That's not what I'm seeing. So instead, we're going to go check out the Aussie US dollar, and we're going to be looking for a long trade on this. Now, you see, we've got this move that's gone quite a ways. And then now we're coming down, we're making lower highs. See, this looks bad, right? This looks like you should be shorting this thing because you got a downward trend here and this kind of trend there. You got this sort of descending triangle kind of thing. You wait for this to break, and then you expect the reversal, and you play that downward side, right? Yeah, that could happen. that could be a good trade setup. My problem with that is I don't expect the US dollar to get and stay really strong, because I expect US stocks to drift higher, right? If the US dollar starts getting strong, US stocks are going to weaken. And I mean, they could both go up, it's true, but generally speaking, US stocks are priced in US dollars. So if the dollar gets strong, it makes anything priced in dollars uh, fall in price, or it puts downward pressure on the price. If US stocks are going to continue higher, then my expectation is the US dollar is not going to strengthen very much, and maybe a little bit, but not very much, right? So I feel like the US dollar weakening means the Aussie yen is going to strengthen, right? But let's look at both sides. If in fact you were to play the downward side, what would that trade kind of look like? Let's see. I'm going to try and, oh yeah, there is the arrow marker. Okay. So let's imagine we're gonna consider this trade here first. This is kind of my null hypothesis style, right? Disprove the null hypothesis, and so then you prove your positive hypothesis, right? Because I can't prove that it's going to go up, but I could potentially disprove that the downward move isn't as good a trade as the upward move. So we're going to look at the downward move. What would we do? In the case of the Aussie, the Aussie US dollar, Aussie dollar, US dollar, we're looking at 0.7482. And to get to support, 0.7454. So you got about a 40 pip move going to get down to support and to potentially break through. If you were wrong, then about it going short, where would you want to get out? You'd probably want to get out right here at 75.05, 75.10, somewhere in there, right? I got to put on the, no, not comparison, indicator, average true range. We're going to need that. So what are we looking at? The average true range over the 4-hour period for Aussie US dollar, we got 24 pips. So unlike the Euro Aussie, which has a 40 pip 4-hour range, we've got the Aussie 24.4. We're just going to round that to 25. So 25 pips is your one ATR move. So I'm looking here at 74.83, add 25 to that, you got 08, and that's 75.08. That's roughly where we are talking about here. So that's good. That's a good setup, because if you're going to go to the downside, you're going to drop 74.83 to 58, 83 to 58. That's 25, right? So you got 25 pips up or down. But then if you break and go through, you probably got a good bit more, this bit or more. There's probably, I think it would be safe to say that if it went down and broke that, you got another 25 to 50 coming. So I got to admit, that's a good looking setup for 25 to the upside and potentially 50 to the downside. But that assumes that we have some reason to believe that it is going to break that support. Okay, if you disagree with my thesis that the Aussie yen is going to go up, or that the Aussie US dollar is going to go up, then you would want this trade. I feel convicted that the Aussie US dollar is more likely to find support there and head upward. Let me show you what I'm talking about. So if you were to buy this right here, you wouldn't have to, you could wait. But even if you were to buy it right here, then you'd have a 25 pip stop loss, because that's where support is, right? And then if you were right and it turns around and goes up, it's going to break this. It's going to head to the new high and it's going to make a move that would go beyond that high at some point. So we're talking about a move that is 70, yeah, 70 pips. Yeah, 65 just to get to the new high. And we'll give it a little bit more. So what I see here is the potential for a 70 pip move or more to occur. And you can make that on a 25 pip risk. I feel like here to get 70, you'd really have to see the trend come down, because there's just going to be a lot of buoyancy to the Aussie US dollar. And if you don't believe me, just recall, what does the Aussie Yen look like, right? Generally upward trending. What does the Nasdaq look like? Generally upward trending. These two, 75% correlated. So I feel like there's more chances for Aussie strength, independent of what currency you're trading against. The Aussie dollar has more chances for strength than it has for weakness. And that's why this trade here, compared to that trade, you've got the opportunity for this one to go down. It's a good setup. I think this one is better, because you could say, I'm going to put on a 25 pip risk, and I got the possibility for 70 pips higher. We'll come back and actually show the paper trading setup for that, hopefully before the end of the hour. Now it's time for me to talk a little bit about cryptocurrencies, why I think Ethereum's your best bet. Well, look at this chart, strong upward trend, and the lows just keep getting higher. We're pushing against this resistance. Okay, first off, we cleared 4,000. Ethereum cleared 4,000. Big deal, no? Let's see, give me the past chart, right? So Ethereum cleared 4,000 a while ago, touched it and dropped, more than, what is that percentage? Let me get you a percent chart there. So if we were going from there, from that high, that was more than a 50% drop. It looks, I just think it was more than 60. It wasn't quite 60% drop, depending on where you count from. If you count from the high, then it's about 60. So big drawdown, right? And that's cryptocurrency, man. That's just 60, 70, 75% drawdowns. We know that. Cryptocurrency does those kinds of big sell-offs. It's amazing that it's come all the way back from that. It's also made, see, we got right here, people got afraid of that. Sellers came in, big downward candles, right? Now we cleared this high. And did we have huge, big downward candles? Did we get sellers just coming in here and squashing it? No. Whether the sellers tried to and buyers just overwhelmed them, or the sellers aren't there in strength, doesn't matter. It amounts to the same thing. You've got more demand than supply for the Ethereum cryptocurrency. Now, if you look into the whole story, the Ethereum network, this smart contract network, has all sorts of technological possibilities. I think people are more easily excited about that idea than they are about the idea that, hey, what's Bitcoin? Bitcoin's a scarcity play. There's less and less of the Bitcoin, so it becomes more and more value. It's a store of value, but how far off into the future do you really have the ability to think of Bitcoin as a growth opportunity? I think that idea has its limitations. So I'm not a Bitcoin enthusiast. I'm willing to be a Bitcoin maximalist. The idea that Bitcoin everywhere, we're going to transact in Bitcoin because we don't trust fiat currencies, government issued fiat currencies, and so forth, right? Willing to believe that the world could go there. But I don't know that Bitcoin being used everywhere really translates into giant gains for Bitcoin. Could it get to 100,000? Sure. That's a 33% gain. But Ethereum, if all of a sudden Bitcoin is everywhere, then Ethereum's not only going to be everywhere for transactions, Ethereum's going to be everywhere for all sorts of incredible new applications, including, I mean, if you can believe, if you can be a Bitcoin maximalist, you can be a new internet through Ethereum smart contracts, the decentralized finance, the decentralized everything network on Ethereum, because both of them are just these wild out there ideas, right? So anyway, all I'm saying is that I think the potential for the Ethereum, uh, fantasy scenario is a bigger fantasy than, bigger meaning there's more to it. It's got more opportunity associated with it than the Bitcoin fantasy. So I just think that the Ethereum is a bigger growth story. I think you could see Ethereum run to 8,000, 10,000, 12,000, 20,000, right? If Bitcoin goes to 100,000, where does Ethereum go? Does it just go to 7,000? Do they just stay in lockstep? That's the worst case scenario. My guess is that Ethereum has more growth to it, so that if you see Bitcoin go from 60 to 100, you see Ethereum go from 4 to 8 or more. So it's not that I think Bitcoin is dead, or Ethereum only, or I just think Ethereum has better potential. You could say, well, Gordon, if you feel like that, then what about Dogecoin or Polkadot or any of the others? Yeah, they all actually, well, not Dogecoin. I hate the idea of Dogecoin, but that's just me and my own personal prejudice. Let's look at Polkadot, because that's actually a good idea. Polkadot's, another Ethereum style kind of thing. What is Polkadot doing right now? Right now, it is not getting past its old high. Ethereum is past its old high. Polkadot is not. So relative strength, Ethereum wins. How about Cardano? Cardano is a more efficient alternative to Ethereum. So what do we got here? It doesn't even look the same. And that's interesting. I like that. I like the idea of trying to play Cardano when it shows some strength, but it's not showing any strength. We got up here, we're doing this, and we're kind of basing. So, maybe it's a good time to sort of buy in and wait, be patient with, because if that's all it's got for pullback, terrific. To me, it just says, look, if you got it, hold it, hang in there. But I don't know that right now is necessarily the time to jump in and be a big buyer, right? I think between those, the one that looks best to me is Ethereum. So those are my three ideas: JP Morgan, Aussie US dollar, and the Ethereum. So I've kind of covered what I think the trade idea for Aussie Yen is. You buy in sort of where it is now, you give a 25 pip stop loss, and then you set up, depending on what you want to do. Are you interested in risking 1 for 1, risking 1 to make 2, risking 2 to make 1? You risk 2 to make 1 if you feel like you want to increase your chances, your percentages of winning, right? And I gotta say, for the Aussie Yen, I really like that idea, because like if I were to just go here and just play up to this high, that it's going to break that high, that's an easy get, right? Now, it's true, you'll take more risk. You'll take 25, 30 pips risk, and then you'll be trying to take 15 to 20 pips on the upside. Your percentage of winning that's pretty high. Your percentage of making a bigger loss if you're wrong, well, I mean, it's the same, right? But it's a lower probability that you're going to make a loss because of the proportions, but you're only going to get a smaller win. So if you're the kind of trader that likes to just collect these little high probability, be consistent kinds of profits, right, then that's your trade setup. But I think the opportunity here is better for a what we call the way of the jaguar, depending on which region of the world you might have been brought up to learn how to say that word. Apologies to anybody that doesn't like it. I say jaguar. This is the way of the Jaguar. You risk this amount and you have that particular payout. You normally expect that you're only going to win that thing about 35% of the time. If you have the sense that there is a better than 35% chance that you're going to get that, that's a bet you want to take when you're playing the way of the Jaguar. And that's kind of where I feel we are right now. I don't know if it's a full 50-50 chance, but I look at it this way. If I take 25 pips up and 25 pips down from where we are right now, and I call that a 50-50, then what are the chances that I'm going to keep moving past those 25? Here, I've got a very solid support at 25. I've got the Aussie Yen looking strong. I've got reasons to believe that the US dollar could look weak. All of those things together make me feel like you've got a lower probability to break this and a higher probability to break that. That's a downward sloping line. And if I break that downward sloping line, there's less of a resistance. There's less, people that just want to pile on and sell at any given price point. So if we start moving up, it's easier for the buyers to break their way through. And if they do, that allows for the bigger trend going forward. So I think that's kind of the setup. You've got this 25 pip risk to the downside with the potential of much more to go. It'll take a little while. It'll take, 2, 3, 4 days for it to trend higher and make it there. But I think that's the setup. So with that being said, I'm going to put this on in paper trade and set up the Aussie Yen trade like that. Yeah, I think I'll just go straight like this. Take profit and then the risk. I want to risk 1% of my paper trading account, which is at 234, was at 240. We'll be going through that here if I can squeeze that in. Yeah. All right. So 25 pips stop loss. Now it's true that where we are right now, 25 is going to be right on the edge. So I'm actually going to fudge a little bit and go 30 pips stop loss, 74.57. Yeah, see, that's right there at those lows. Let me even go 31. And then that's why we're going to stay with 75 instead of just 65 or 70. But either way, that take profit's going to be assuming a longer upward trend. And it's a kind of high quantity, but it's a large 7.5 standard lots for this size of an account. All right, so off we go. And do I have that position? Yes, I do. Took a $30 cross loss on that and already jumping right into profit with that trade. I mean, that's just a function of the size that I have. It's a very, comparatively large size. And we're just fluctuating back and forth. You love it though when your trade idea is already so much right that it jumps right in and starts making you profit. Okay, so that's the Aussie Yen trade. Or not the Aussie US dollar trade. Okay, work that one through. We'll come back next week and see what that is. Now, let's go look at the Ethereum trade. Last week I said Ethereum long, and that worked out to be right. Here, I want to do the same thing. I want to make lots of little trades on Ethereum. And let's go back to the regular, and we're going to see. I just want to. I don't want to play buy and hold on for dear life or hodl or whatever you want to call it. Right? I don't want to do that. It's 4,000, right? I mean, I want to hodl if I bought at 400, right? At 4,000, I just want to trade this thing. And how do I want to trade it? If I buy it here and I set a stop loss and it runs up into this area, I'm going to take that profit and get ready to do that over and over again. So here's the setup that I like. We're right here with Ethereum. And let's check out our, I should change that to blue. blue for the entry. And let's check out the average true range. Average true range is 239. Let's call it 250. I want to give it 250 to the downside. Actually, I want to give it 500. Why? Because I want to risk 2 to make 1, right? So we're going to come down here to from 40.50 to 35.50. Yeah, I don't know what I need to give it that much room. I'm gonna see this stuff here. That's old resistance. That's kind of old support, old resistance. Calling that a support. I don't need to give it that much room. I'm gonna go right here, 37.37, or let's just call it 37.50, and we're at 40.50. That's about 300. So we'll give that about 300 pips to the downside. And red for that's my stop. And then now we're going to go up here and just take 150. So if I'm at 41, where am I? 41.63. That's where we are. 41.60, 42, 43, just over 43, 43.10, somewhere right in there, right? Okay, is that right? I'm gonna make sure I got my numbers right here. You know, let's get the quote going, and I'll let the trade setup do it for us. So if I'm going to look for 300 to the downside, yeah, that's actually got to be 330,000. Is that where I'm after? Yeah, that's exactly, that's so 30,000 to the downside, and then 15,000 to the upside. So 42.75 based on where it is right now. Okay, so I'm risking 2 to make 1. I just want to make that quick hit. Now I could say, well, if it comes up here, great, just take the lid off. Don't sell it and let it run. I could do that. I think that Ethereum is not going to just take off and go skyward. I think it's going to, you know, noisily trend higher. And so I want to catch this 150 and take it over and over again. So we're going to do it that way. I'm going to risk 1%. And this says buy 7 Ethereum coins. All right. So now we got that Ethereum trade set up. Good. This is a perfect time. I got 15 minutes before we want to get ready with JP Morgan. So let's go and look and see where's JP Morgan trading pre-market. It closed around 171.75. Let's switch over to here so I can bring up JP Morgan. And this, yeah, this is 5 minutes. So in the pre-market, we're up 172. Okay. Oh, yeah, I got to tell you about BENE. Okay, why am I had that problem here? I got to really maybe download and reload JP or Thinkorswim. Right, so where are we here? Okay, yeah. So we're at 171.15 by 172.51, $1.36. Huge wide spread. I mean, that's just not a lot of action going on. We got this number up here because the spread is so big. If we were to cut that in the middle, we'd be, you know, closer to where JP ended around 171.70 something. So I don't think that there's any particular, you know, big gap up or gap down likely to occur on JP Morgan. That being said, we can expect to calibrate, you know, just where it is or a little higher. If we were to get in here, where would the stop loss be? So this is tricky because you love the idea when it breaks the high, let the old high be support, but that's way too noisy. I don't think you could buy JP Morgan and set a stop loss $1 lower. I think you're going to have to give this room, but you probably don't have to give a lot of room. Probably don't need to come clear down to here. We're up, and if we're going to stay up, we're going to keep going. If we're going to keep going, we're not going to come back and retrace deep into this. So let's look at this candle right here, this big downward candle, which started off the selling. If we reprise that candle, if we come back and go all the way down to that candle, for sure, we're not going higher. But I'll bet that we could even go just halfway to the candle and a little bit more and say there, that's where we're going to take our stop. So I kind of like this idea, 168 and change. Let's call it $4. All right. And again, I'm going to do way of the pack dog, risk 2 to make 1 instead of way of the Jaguar, risk 1 to make 2. This is a trade where I want to take a quick profit and come back and do it again. So I'm going to set my stop loss there at $3, no, $4, which puts me at 168.50, and my take profit is going to be $2 higher. That's the way we want to do that. We're going to go 1% risk, which translates into about 500, well, 600 shares, if calling this for 587 the way I've got it set up. So I'm going to go ahead and set that trade up just that way. Oh, except that is, yeah, that's assuming 172.51 as a limit order. That's kind of weird because, well, whatever. If it opens lower, great, I get in at a lower price. But I'm willing to go all the way up to where its ask price is in the pre-market, which might be way up there. Fine, I'll take it. For $4 stop loss, $2 take profit, 66% chance baseline. I think because it's the leading stock of the strongest sector, you got a little bit of edge to that. So you got about a 70% chance you're going to make that profit. Okay. All right. Those are the 3 trades. Now, let me tell you about this one. If you heard at all last week about DWAC, DWAC, how it went crazy, right? DWAC, Digital World Acquisition Corporation, right? So special acquisition corporations are all the rage. So this thing did nothing forever, and then all of a sudden, kabam, and then kabam, And right now, it's like pre-market trading. I can't remember what it was. Okay, so we got Nasdaq back there. Where's DWAC trading right now? 112, 113. Its quote is 113 right now. So it's up in this range in the pre-market, right? So in other words, this has got a lot of fury and a lot of interest and excitement going on around it. You know how GameStop was that thing for a while, right? It was the big short squeeze. And GameStop was kind of the main lightning rod focal point, but there were other stocks that were catching people's attention. And those other stocks, was AMC, right? All right, well, the AMC to DWAC is this, BENE or BENEW. It's the same kind of thing. It's a special acquisition corporation, and it's got some story, and it jumped from 10 up to 18 on Friday, and then came back and settled at 11. But after hours, BENE is, before the market, it's trading at 18, right back at its old highs, or close to, So it's going to open right in here. Now, why don't I have this? Because this could do what DWAC did. It could run up, right? These are mania stocks. These meme stocks, they move the way they move not because investors are excited about them, but because traders are wild and excited about them. They're lotto ticket plays, right? Maybe they hit, maybe they don't. The problem is trade setup, like we started this discussion. How do you know you've got a good setup? You don't. So you've got to be able to make a good plan. Well, what would a good plan look like here with B and E? Well, I would have to believe that it had the ability to go much, much higher than it is right now. I know nothing about the stock, the story, the valuation of it. I mean, I could look that up. I could. But just looking at the chart, what would I have to do? I would have to buy this here and be prepared at least for it to come all the way down to where it closed on Friday. And more likely, be prepared for it to come all the way down to where it opened. So I'd basically have to buy an $18, $19 stock and give it a 50% stop loss. I mean, that's what you do with penny stocks. When you buy them at $4, you don't set your stop loss at 405, or I mean, sorry, at 375. You set your stop loss at $2. Now, mentally, you might say 25 cents and whatever, right? But functionally, you've got to give it lots of room. So uh, it's an $18 stock, and I'm going to let it go all the way down to 10 or 9. Okay, it's just numbers. Just buy a smaller number of shares and let it fluctuate. If you want to play the game, do it that way. And then take whatever you get within 1, 2, or 3 days. Don't hang around in this forever, right? That's an easy way to make the trade. It's not my cuppa. I just, this is not the kind of trade I like, because I feel like you got to watch it because you just don't know what it's doing. You don't have a good sense. I don't feel like I could put on the risk 2 to make 1 and walk away and let it do its. I'd have to watch for that big opportunity where it jumped up and I said, okay, take that. And if you're the active trader who day trades and watches all the time, this might be fun for you. But this is kind of a new world, right? What you're going to want to do is you're going to watch the DWAC to see how it does. Because if it's going up, this is going to go up. If it starts going down, people say, that's it, we've topped out, then this is going to go down. And so I just don't feel like there's a solid enough trade to make where you could get in and get something and get out. Now, it might be, if you're going to watch it all day long, you see this open at 18, you see it make a dip, it doesn't just keep collapsing, it finds some support somewhere. Great. Buy it, sell the new high, right? Let's suppose it dips and finds support somewhere in between 15 and 16. You buy it, you're gonna try to ride it back to the new high and sell the new high. And whatever distance that is, let's call it $4. That's your stop loss. Simple as that. Now, you don't just sell it instantly when it gets there. When it gets there, you watch, you put that stop tight because, hey, this could keep running. This could run $20, $50, $100, who knows, right? But once you get at 19, you just wait until you see it sort of top out. And then if it starts to come back at all, then you just take the profits and call your trade good. And then don't second guess, right? Okay. I haven't had a chance to go back and look at my old trades, but I want to do that. So let's see, do I have this trading panel open already somewhere? I already had it open. Okay, great. So, wow, both the Ethereum and the Aussie trade doing well since we started talking here. So that's cool. Let me go back and look at the history and show you the trades that I have been talking about over the past several weeks. Hopefully you've been following along and you know this, but let me just jump to account history so you can see the end result. So I had some good ideas, some winners and some losers, going clear back to September 24th. I better close that so we can see what these positions are. So this was the gold trade, EGO. And that one didn't work out. That was a loss. But then we followed it up with SQQQ going short the markets. That one was a win. That worked out nicely, and we won more than we lost there. So that was good. Then we had Disney, which turned out to be a small loser because as it went higher and then kind of came back, we moved the stop up, and then we got stopped out. So that one didn't work out great, but between these three, we're still net positive. Then we got the Ethereum trade. Last week was that? Yeah. And then the CVX trade, that one, both of those worked out good. And then there was the Euro Aussie trade, which worked out fantastically last week. Then we got this big loser right here, IBM. Why was this big loser? Now, all told, we still have net gains over the profits. And look at the win rate too. 1, 2, 3, 4, 5, 6, 7. And we have 3 losers and 4 winners. So I'm just a little bit, that's what, 55, 57%, somewhere in there. I mean, small sample size. We'll come back and look at it when we got 30 trades down. But let's look at this IBM trade real quick. Why was this such a big loser? 6,000? Why would we lose that much? The answer has a lot of learning associated with it. Let me quickly run to IBM and you'll see. So first off, the problem was, if I had been making this trade myself, not in paper money, but myself, I would have gotten out the day before earnings. I gave the trade idea though, with the idea that, hey, this could be good. And I didn't give any qualifications about get out before earnings. So I didn't feel like it was fair for me to try and monkey with that trade. I had to let it play out. And what happened was I had my stop loss set at 138. Well, a 138 stop loss would be fine if I was making the trade normal, as if the price action would just be normalized, wasn't going to gap down. But in fact, it did gap down. Now, sometimes people don't put a stop loss on, don't put an automatic stop because they say, well, if it gaps down, I don't want to have to sell out immediately because it could come right back. I would hate to get stopped out only to have it come back. But what if this happens? It gaps down and keeps going, right? Then don't you want to be out right there? Well, that's what happened. We got out at that $6,000 loss, but we limited our loss, didn't make it any worse. I've seen this happen far more often than I've seen the dip down and bounce back happen. So I'm always glad when I get stopped out from a gap and then I'm the first one out because I've got my stop in place. So we'll talk more about that, but now let's run and see our JP Morgan trade. We've already got our other 2 trades in. What's happening on JP Morgan, and also what's happening with the markets in general. Let's see, go to the chart and the regular charts. Let's see, how's the Nasdaq opening? All right, so we dipped and we're coming back a little. What's the Aussie Yen doing? Aussie Yen is selling down a little bit. That's interesting. Now, I really didn't expect that. I expected the Aussie Yen to move up. There comes the buying that I kind of expected, more of the drift upwards. We'll see if that allows the Aussie Yen to keep some support. Question is this the Aussie weakening, or is that the yen strengthening, right? We'll run over and look at the Aussie US, and it is coming back off of the high that it had. So our position is still not negative. Interesting. Okay, now a little buying stepping in there on the Aussie Yen and the Nasdaq taking off. Okay, so with the US stocks heading higher, how's our JP Morgan position. We haven't gotten in. Oh, that's interesting. The fact that I haven't got filled on JP Morgan. Oh, there finally did. Got filled at 49. See, so at first it had gapped higher than where my stop loss was, and wasn't filling me, but now it is filled, and that's coming back. So we'll see. I got enough room to feel comfortable. I got $4 on the downside, and I'm going to take $2 profit on the upside. So far, the markets are shaping up about like what we would expect what we expected them to do. Aussie and Ethereum both looking reasonably good for the trades we set up. When we come back again next week, we'll come up with 3 new ideas, and we'll also sort of dive a little bit more into our track record. Until then, everyone, take care.